All right, ladies and gentlemen, welcome back to another webinar. Today's Thursday, the last webinar of the month. Tomorrow, the 31st. So tomorrow is Friday. Wow, that's pretty cool. We're gonna finish the month on a Friday, and we're gonna start the month on a Saturday. That's interesting. Okay, so as everyone know, the FOMC did pause the rate, as you know, widely expected from everyone in the market. And most of the people on the trading floor was asking me those two questions at the moment. Fed maintain the interest rate. Will it impact the US dollar, and how will this impact the US dollar? Positive, negative, or neutral? You know, how? And what is the Fed looking at the moment for the next meeting? What are the data points that Fed is looking to take the decisions for the next meeting? Will it be, whatever, GDP, PMIs? Could it be CPI? What is the Fed looking? So is the Fed being dovish is the title today, and that's where I would like to talk about the whole webinar today. So before we go any further, we'll put the disclaimer, the risk disclaimer. I'm going to give it a minute to everyone to read, and then we should be good to go. All right, let's get it. Okay, cool. Let me take off from this screen, and let's go at finlogics.com. So come to finlogics.com, and then come to economic calendar, and then I'm gonna send this link to everyone in the chat. So Finlogics economic calendar. There you go. Sent. All right, that has been sent. So today, and I want USA, and that should be it. Okay, cool. So United States Fed interest rates decision. Okay, so today, January 30, we had the forecast at 4.5 from the previous of 4.5. So meaning no changes was expected. So and the actual came in to be 4.5. Okay, and that's the second time they've maintained the interest rates at 4.5. Okay, so if we looked at here, they've started cut into October last year, 2024, and then October, November, sorry. The month, the 8 is, what is the 8th? I hate the numbers like that. So 12, 11, 10, 9, 8. So that was August. And then later on, they've cut, on the 9th. Yeah, that's correct. They've cut 25 base points here, and then another 25. What was it? Yeah, 25, 25, and then they've stopped. Okay. Twice. So December was widely expected as well, a pause, and then January was widely expected as well, a pause. Now, that haven't been a huge move into the market. As we can see right here, we saw the pause and then the reaction, the immediate reaction on euro dollar wasn't like, that's a 1 minute chart. It wasn't the biggest reaction. And at the moment, we are trading pretty much on the same levels. So we haven't had much movements from the when the release was done. Okay, so it was pretty simple. Because remember what I said yesterday? I can't remember if it was yesterday or Tuesday. I think it was Tuesday. Or no, it was yesterday. that I've mentioned that if it's not surprised, if the market is not surprised about it, then there's no point of big reactions. Okay, so let's come to Finlogic's chart, and I'm going to show you what I mean by that. Okay, so let's go into Eurodollar pretty quick. Okay, cool. Take my foot out of here. So that's the Eurodollar, and it's trade pretty much the exactly same where it was trading before. Okay, so pretty much no changes from Eurodollar. If that quote is not correct, okay, there's something wrong here. Let me just check, because that's not the right quote on Eurodollar. Okay, let's use TradingView then. I've tried to use, didn't work. So let's go Eurodollar here. Okay, so this was the release time. Okay, so 6 a.m. in Australia for me, and then at 6:30 we had Jerome Powell, okay, giving a speech. So at 6 o'clock, right here, at this candle was when the interest rates decision was released, and everyone already knew what was going to happen, and that would be a 25 a pause into the interest rates, but no one knew what was Jerome Powell saying. So the interesting point here is that yes, there is a certainty of there is a point of uncertainty on what Jerome Powell will say to us. And that's what makes the most important event. And as always I say, the interest rates decision, most of the times, 90% of the times, it's already predicted to be X, Y, Z. But what the chairman of the central bank will say is very hard for us to try to speculate what he's going to say. You know, I mean, all of them say the exactly same thing as it's on the rate statement. We're going to be having a look at that on later. But what are the questions that majority of the journalists ask them? That's completely out of the question. We don't know. Okay, so when Jerome Powell came in and say that they're very data dependent, they don't have a rush into tightening the monetary policy. So if needed, they will be maintaining at a higher level. But there's a big but here. The thing is, inflation is coming down, but it's not coming down as they wanted. Okay, so inflation is being persistent as they thought it would be. And that's a good point, because if they're saying that inflation is being persistent than what they were expecting of, if we have lower readings, that's going to make the US dollar very weak. Okay. And if we have a weaker dollar, then we have, an upside on euro dollar, downside on USD JPY, and so on and so on. So my perspective here is the Fed is very data dependent, and there's no thing that's going to change the mind and not looking at CPI, NFP, unemployment rate, average hourly earnings. And now, of course, Trump. One of the journalists has asked the question, what do you think? It's not the on, there's exactly same words, but it would be somewhere around those lines. What's your mind pretty much? What's your thinking about Donald Trump coming into power? Do you think it's gonna change something? And he didn't answer that question. He's like, I'd rather not answer it. And same for Elon Musk. The guy asked it in Elon Musk as well, and he didn't want to answer. So interesting, pretty interesting, because he knows that if he talks anything that it's not, how can I say that? Not awaited from, not what the crowd is waiting for, he can be retaliated into social media. Anyways, that's something for another day. So yeah, now let's go to the Federal Reserve. Let's just type Fed, F-E-D, into Google. And as you can see, no hurry to cut rates. Oh yeah, of course, that would be my second thing. Bitcoin and crypto are braced for a huge Fed price shock. Yes, if we look at Bitcoin, let's have a look at Bitcoin. If you look at Bitcoin, Bitcoin is going up very, very high, very, very quick. And especially because Jerome Powell say something around those lines that he believes that the banks could be offering crypto for clients if those clients know the risks and are fine with dealing the risks that they are leading, okay, that they're dealing. So, well, that's pretty much a green light from the Federal Reserve for banks to sell crypto to clients. Isn't that crazy? That's amazing. That's really, really nice. I think there's a big road yet to, for us to see crypto, especially Bitcoin, being like a friendly sort of thing that everyone wants to have, because some people we still believe that this is for, used for the wrong purposes, as anything can be used for wrong purposes, but there's always the right side of things. Okay, anyways, that's not about Bitcoin today, but I just thought it would be fun to talk about a little bit. Yes, the Fed is sort of getting there with Bitcoin, and they are fine with the banks selling those cryptos to client. When I mean selling, is selling investments, so selling funds that are trading Bitcoin. Okay, cool. Now let's go to Federal Reserve Board. Let me send this link to everyone here. Cool. Once you're there, come to monetary policy and then come to meeting calendars and information. And then we're going to have already the 2025 FOMC meeting right here, January 28, 29. And then you have the statement and the press conference you can watch. We're just going to have a look at the statement, and you can click on the HTML so you don't have to download anything to your computer. So recent indicators suggest that economic activity has continued to expand at a solid pace. Yes, we saw the GDP as well as, non-farm payrolls, etc. Everything it's going well. Average hourly earnings is going well. But again, inflation is still very sticky. The unemployment rate has stabilized at a low level in recent months at 4.1, 4.2%, and labor market conditions remain solid. Correct. NFP has been really, really solid. Inflation remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. The committee judges that risks achieving its employment and inflation goals are roughly in balance. The economic outlook is uncertain, and the committee is attentive to the risks to both sides of its dual mandate. In support of its goals, the committee decided to maintain the target range for the federal funds rate at 4.5 to 4.25 to 4.5%. In considering the extended on timing of additional adjustments to target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee will continue reducing its holdings of treasury securities and agency debt and agency mortgage-backed securities. The committee is strongly committed to supporting maximum employment and returning inflation to 2%. They always put it the same thing. That's interesting. In assessing the appropriate instance of monetary policy, the committee will continue to, that's very important, monitor the implications of incoming information of the economic outlook. Will be prepared to adjust the instance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's committee goals. The committee's assessments will take into account a wide range of information, including NFP, CPI, CPI expectations, and financial and international developments. So these are the pretty much 3 to 4 things we should be looking at for the Fed next month. Okay, is it? I think there's only March now. Can't remember. So we have to pay attention at the NFP. Okay, we have to be looking at if it's coming higher, if it's continued to be on a very solid pace, let's say like that, we should be looking to a stronger US dollar. If the CPI comes in much weaker than expected, let's say it was expected to be 2%, it comes in to be 1.8%, then that will weaken the US dollar. Okay, so a lot of attention on those next data points. Oops, sorry. On those next data points that are coming for the next month. All right. So it's free to read. You guys can go into the Fed, have a look into it, and definitely take some time to evaluate. Now, let me just check when is the next Federal Reserve meeting. What are the pricing already? Yeah, as I thought, the next one is only in March, so we don't have anything on February from the committee, and only on 19th of March. 83% is expecting another pause, only 20% is expecting a cut. For the June, yeah, still there, 25 basis points cut on June. Interesting. Nice. Okay, cool. But maybe can change because there's only 54% here and there's 40% here. So if those 6% come to here, because it's more probable that they come to 25 and not 0, if they're believing on a 50 basis points cut, then it's gonna be interesting. Okay. Another thing that you guys should know is if the market has, I don't know, the economic release is saying that the Fed will maintain the rates, but then this guy here is saying that they will cut the rates, the market will be looking at this one and not the economic calendar. Okay. So, as I say, I would be waiting to the data to get out to be looking to trade euro dollar. And I think we can definitely have a short position on euro dollar at the moment, all the way down to this area. So I'm short in euro dollar. My stop loss somewhere around here, and my take profit around there right now. Okay. The reason is Europe is really not well in terms of monetary policy, inflation areas, geopolitical tensions, etc. And the US dollar, I still believe that they will continue to hold for longer, as the ECB can most likely have a cut into the next meeting. So when we put in perspective, who will hold for longer, that's when we should be looking to trade. ECB will probably continue to cut because inflation is coming down. The Fed will most likely continue to pause until July. So shall we short your dollar or shall we long it? That's the question. I would be looking to short, but if the market becomes more neutral on USA and we continue and we start to have some hawkish points into ECB, then I will be getting out of this position and looking for a long. Okay. Actually, let's have a look at Nvidia. I've mentioned that that would be a good point to long it. If you've longed it somewhere around here, I've mentioned that, you would have made 10% and you would be up now 5%. Okay, in only like less than a week. That's what big banks give to clients in a year, and you would have done this in a week. Interesting, right? Anyways, so now how this will impact all of the currencies, not only the US dollar, but how this will impact other currencies as well. So if we look at the DXY, trading at 100 and pretty much 108 now, most likely we can see it coming up. Oh, that's a 50-minute chart. Let me let's go for 4 hour. Let me zoom this out. Cool. Most likely we can continue to see a uptrend and not a downtrend. Okay, I don't believe on US dollar falling like this, and I believe a continuation up into that. And that's another point of why we should be looking to short the euro dollar. Okay, especially I think euro dollar US dollar index could be somewhere around here into the next couple days, couple weeks, and euro dollar could be somewhere around down here. All right. Do you guys have any questions? Jonas, good morning. Good morning. Can you tell us which couples are interesting for you to trade at the moment? You mean which pairs? Yeah, definitely. So take like this, right? Which one has been the most volatile pair in the last 24 hours? It been the US dollar, okay? Not only the US dollar, but anything with it perks. So basically, Aussie dollar, euro dollar, pound, yen, Swiss franc, Canadian dollar, etc., etc., Australian dollar, New Zealand dollar. So if we take in consideration Australia against USA for interest, for example, if the US dollar is being strong and the Australian dollar is being very weak, should we short it or long it? Well, my opinion is short Australia and long US. So we would be looking to short Australian dollar. Another example, how should we look to trade USD JPY? USD is strong. JPY is strong as well. So should we trade? No, we shouldn't. But there's a perspective of if the Japanese bank, the Bank of Japan, becomes a little bit more hawkish, saying that they will do another 25 basis points hike, most likely the best opportunity would be to look into short USD JPY. Okay, so why is that working? So if we look to USD JPY, let me take this off. I strongly believe that it can come down to this area. Okay, I'm a big believer on that. Somewhere around here. And we're not that far away, if we think about it. Get the measurement. It's like negative 1% fall, 1.5% of a fall. So 216 pips. That's nothing. Okay. So that's a good trade as well. But again, that goes against euro dollar trade because we're shorting US dollar here. That trade, this trade here on USD JPY would be really, really great if we have more confirmation from the Bank of Japan that they are looking to increase even more the interest rates and not maintain the target for a very long period of time at the moment. Okay. GBP/AUD. So GBP/AUD, I had a trade that I've done yesterday. If we come to FinLogics, and then we scroll down here, and then you click on this trade, long GBP/AUD, we can see that it is basically on the entry point. I do believe on a stronger GBP/AUD. The reason being, it's actually above the entry point. My entry point was somewhere around here, right? Let me just check this again. $199. Yeah, this chart is not correct. This should be somewhere on the top here. Yeah, it's not good. Anyways, so the reason why I think GBP/AUD trade is a good long is we had the release of the CPI from Australia, and that was really cool. That was really like cooling off, and we saw that majority of the big banks like Westpac and National Australian Bank, NAB, are predicting a cut into February. So if that happens, if the Australian dollar, if the RBA ended up cutting the interest rates, most likely we're going to be having a very, very weak dollar, depending on what they say, okay? And if they don't get us off guard, let's say, But the pound is still very strong. The economy is not that strong, but the pound against the Australian dollar, especially against the Aussie, it's really, really strong. Okay. So these would be my trades actually for that I would be looking at. Yeah, of course, I have a bunch of other ones that you can be following me on FinLogics. There's all of those trades I post every day. But yeah, that should be about it. So we've seen that the Fed maintained the interest rates will impact the US dollar. Of course it will, most likely positively, not because of the pause, but yes, because of what they say. Not a problem, Eunice. Always welcome. And what is the Fed looking at the moment for the next meeting? Fed is looking for the NFP, CPI, as well as the average hourly earnings and the CPI expectation. So if people are looking to be higher, then they would be looking to, take more careful and so on. Again, guys, it's a quick one. So, how do you follow someone on FinLogics? You need to have an account. So you need to create your account, and then it's going to be like follow here. Let me show you with another person because I can't follow my own profile. So let me just get this. And then let's say this person here. See, I have the follow button here. If I click follow, all of his trades will be appearing to me first. Okay. So that should be about it. All right, cool. Thank you so much, guys. Have a great weekend ahead, and I chat to you next Tuesday. See you. Bye-bye.